For anyone who's been paying attention to the markets and really just the news in general, it should be pretty obvious that the AI boom is here. You look at the stock prices of companies like Nvidia, Microsoft, Palantir, and many other AI-powered stocks. They have just been soaring, and really since the beginning of 2023, when the more widespread adaptation of ChatGPT and other large language models, as well as other AI applications, really became more mainstream, and the growth has been exponential ever since. Certainly you see applications in areas like military technology. Tesla just did their We Robot event where they had autonomous taxis and vans and a Robovan, as Elon Musk put it, of course, the Optimus robot. So grand visions for the future. AI is here to stay. A lot of excitement about it in the market. Unfortunately, this means for investors who haven't been already invested in the sector, do I buy in now, right? Valuations are at nosebleed levels, and it's hard to know exactly whether it's still worth buying some of the AI boom or wait for things to pull back or find value elsewhere. Well, fortunately, there's still one sector that has not fully caught up with the AI boom in a lot of the mega cap tech stocks, and that's an AI infrastructure. Now, some of these companies like Vistra Corporation and Constellation Energy, those have boomed incredibly. In fact, Vistra is even higher performer year to date than Nvidia. But there are some other aspects that are just starting to play catch up, and so this is a great opportunity for investors to take advantage of it. But before I get into today's video, if you could please give it a like, that would really greatly help in its distribution, help me grow my channel. Thank you very much. Okay, so what is going on in the AI infrastructure space? Well, billionaires and big boy investors like Nvidia, Microsoft, a lot of alternative asset managers led by people like Bruce Flatt at Brookfield. You have Blue Owl Capital led by people like Mark Lipschultz, BlackRock, of course, and many others are pouring billions and billions of dollars into the AI infrastructure space. And this is because simply, these AI models are great. What they can do is very powerful, but they need a ton of energy and they need a lot of data centers to be able to run, power, process these huge AI applications. And so there is a huge build out that needs to take place in order for AI to really fulfill its full potential. And so that's attracting a lot of capital. You have deals like Microsoft just recently made a huge deal with Brookfield, as well as its subsidiary Brookfield Renewable Partners, in order for them to develop many gigawatts of power using renewable sources to power Microsoft's move into the AI space, especially with their data centers. Microsoft has also been making deals with Nvidia and BlackRock to start some pour tens of billions of dollars into developing data centers and the power necessary to power AI applications. Deals with Constellation Energy over nuclear power plants, as well with Microsoft to do some similar projects. You have Blue Owl just entered the digital infrastructure space with an acquisition, and they're going to be using that to develop data centers and potentially explore some powering of data centers as well. The list goes on. And so the billionaires and big boy investors, who are already the big boys in the AI space, they are pouring tons of money into AI infrastructure, and that indicates that this is a place where capital needs to go, and it could be a great opportunity for investors. We're now going to spend the rest of the video talking about what are some really attractive opportunities to invest in this AI infrastructure space, so that dividend investors who want income from their investments and who want to be able to play the AI tailwinds but not have to pay premium prices for all the big AI names that have already soared to record highs can do this. And so these are some great opportunities where I'm allocating even some of my own money today. Before I get into the rest of the video though, if you could please subscribe to my channel. Again, it would just help me to reach a larger audience, make this more worth my time, and enable me to pour more effort and resources into making these videos for you. I would greatly appreciate it. Thank you so much. Okay, so what are some of these exciting AI infrastructure opportunities that are available for us today? Well, some have already appreciated a good bit, though I still don't think they're overvalued. You see a lot of this in the C Corp midstream space with a lot of the leading natural gas players, like the Williams Companies is a great natural gas play, Kinder Morgan is a good gas play, Enbridge is a good gas play, Waniak is a decent gas play, TC Energy is a great one as well. They recently spun off their liquids pipelines business, ticker symbol SOBO or SOBO, but the remaining TRP company is an exciting utility-like growth midstream company that has exposure to the power industry with a lot of proximity to data centers. So that's a very promising opportunity. There are a lot of utilities out there. I mean, you can just buy ticker symbol XLU as a proxy on the utility space. But there are a lot of other utilities out there that are engaged in electric production. There's massive need for electricity to be produced to power these data centers. So that's another exciting opportunity and a space that's not overvalued. It's not undervalued, but it's not overvalued at this point, even after the recent rally. I also really like the Brookfield subsidiaries. I already mentioned Brookfield. They're investing in this space. They've got some strong tailwinds at their back, but I don't think their subsidiaries are really overvalued. Brookfield Infrastructure Partners and Brookfield Renewable Partners both have exposure to this. BIP, they are, or BIPC if you want to avoid the K1. I think they have a lot of promise. They're investing in data centers at very high IRRs. They expect over 20% IRRs on those investments. They have some natural gas assets as well, both in their utility and in their midstream businesses. They also have an investment in a chip factory with Intel, a partnership with them, and that chips obviously are a big part of AI as well. So BIP is a good way to make a planet. They get a 5% distribution yield. They're growing their distributions at a mid to high single digit annualized rate. Their FFO per unit at a double digit CAGR. I think there's still some value to be found there, especially if interest rates continue to fall. BEP, Brookfield Renewable Partners, I've already mentioned them. They're another great opportunity. As I've already said, they're doing business with Microsoft, and I think there's additional opportunity for that to grow. On top of that, they own Westinghouse, which means they produce nuclear reactors, and a lot of nuclear is being built around the world and even increasing in the United States as one of these means of meeting this immense power demand to power AI. And so they probably are going to see some business pick up there. They've already gotten some demand from China, for example, for some of their reactors to build some nuclear power plants there. So again, I think both of these businesses, they have similar growth and yield dynamics as BIP. Both are very defensive with their long-term contracted cash flows, BBB plus credit ratings from S&P, well-laddered debt maturities, indexation to inflation. So they're good in all economic environments in terms of fundamentals. And I think there's a lot of promise to be had there as well. So hopefully this will be helpful for you on your dividend investing journey. Again, I'm not saying at all that you cannot invest in the mega cap AI stocks. In fact, you can do that without even sacrificing passive income if you invest in the JP Morgan NASDAQ Equity Premium Income ETF, JEPQ. They hold mostly all the big names. They employ a covered call strategy on it, return that to you at fat monthly distributions. That's an easy way to get exposure to that while hedging some and getting nice income. But I think that the most opportunistic way to play the AI boom right now is to play these infrastructure companies that are going to enjoy long growth in demand from the AI boom, but are not priced at premium valuations. In fact, some of them I believe are undervalued today. And so again, if this video is helpful to you, please like it. Subscribe to my channel. Let me know in the comments below what your favorite AI investment opportunities are today, especially if it pays a dividend. Thank you very much. See you next time.